Good morning. Welcome to the BF Anderson Technical Report for October the 10th. Let's get right into the charts. As you can see here with the NASDAQ, we continue to flounder. We're moving sideways, very frustrating. I guess we're waiting on the results of some type of trade deal with China. Really hard to say, but what's happened here again, we got the correction. Moving sideways, we're still below the lower moving averages, and the lower moving averages have turned down. So this is still a time to be cautious. Now on the weekly, we actually last week broke below the 35-week moving average, but then by Friday we closed back above the 35-week. So far the 35-week moving average is holding, so this is positive. The advanced decline line, again, is basically flattened out. Not a whole lot to say about the advanced decline line other than we're just moving sideways. The high-low index, we're not seeing a lot of new highs. Very few stocks are making new highs right now, and we are making some new lows. Yesterday, we made 64 new lows on the New York Stock Exchange. Still, we're not getting crazy here with the number of new lows, but is not really that positive. Now, the small cap index, I just want to point out, the small caps have been continuously a problem as they tend to indicate whether or not the market is, seeking risk or not seeking risk. And you can see here the big drop that came starting in September of 18, major drop. We then got, the moving averages here I've got here the 50-day moving average and the 200-day moving average, the 200 being in blue. The small caps are below the 200-day moving average. Again, just moving sideways, somewhat of a bear market in small caps. We'll talk a little bit more about the small caps here coming up. Now, on the long-term indicator, we're continuing to see a positive uptrend. We're not seeing any kind of death cross. So overall, the long-term indicator looks very positive. On fear greed, we have gotten back into extreme fear. This is probably a good time to be thinking about adding to your portfolio. You don't want to be adding to your portfolio when you're in extreme greed. We are in extreme fear. There is a lot of fear out there. Now on the S&P 500, we're continuing to see an uptrend here. This is the 200-week moving average. Again, just note, we get close to the moving average, we rally to new highs. So we get these corrections or bear markets like we did back here in 18. We rallied to a new high, but since then we have pretty much stalled out moving sideways. This is a trendless market, unfortunately. Now the Dow, the global Dow, which is the global stocks, again, moving sideways, nothing to really report. Nothing more frustrating than a sideways market. That's what we're dealing with. Value line geometric composite index, again, we're at resistance here at roughly 510. The index closed yesterday at 501.93, so we're still holding in this resistance area, but we're just not breaking through, moving sideways again. Now on growth stocks, what I did here is I took the Russell 2000 and I compared it to the S&P 500, and you can see that they really went into this. When the line's going up, the growth stocks or the small caps are doing really well. When the line is going down, the small caps are underperforming. So we have to really understand that what's happening here is that growth stocks are pretty much underperforming the market. As you can see down here at the bottom, I've got a graph here of Facebook's price, and you can see where Facebook, hit its high last year around August, failed to make a new high, and is basically in a downtrend at this time. So growth stocks, whether you want to look at the FANG stocks, you want to look at large cap growth, small cap growth, growth stocks as a group are underperforming right now. Now the good news is that the unemployment rate is at a 50-year low. This is the unemployment rate. It's updated every week. And last week we got a reading of 3.5% on unemployment. So the economy is doing well. Now on the top 5 stocks, we're seeing a couple of different names here. Now this is not a different name. This is a software stock, Coupa Software. Now the software stocks have really taken it on the chin here in the last 6 months. And however, Coupa has really been the only one out there that has held up. Now this is somewhat of an accounting software but it is holding up. Now here's KLA Tencor, which is again semiconductor manufacturing. Stock somewhat moving sideways. You know, we broke below the 10-day moving average, but we did not violate, but the stock is holding up. This is POD, which is a medical stock. Again, we broke down below the 10-day, moving sideways. On Ring Central, this is a company that we use their product. It is a telecommunications product. They announced they got an upgrade, plus they announced a major contract, and the stock rallied on very heavy volume and looks interesting. So this would be your flagpole. This is your flag, and you can see it's an ascending flag. Stock looks somewhat positive. Target, which is really one of the few retail stocks that we're seeing on our list, got upgraded by Raymond James this week. Stock has been holding the 10-day moving average. Here's your flagpole. You've got a flag going here. Now it's starting to break out to the upside. So all in all, what I'm saying is the market's moving sideways. This is a trendless market. So if you're a trend follower like we are, this is very frustrating. But hopefully the trends resolve themselves here in the near future. We'll just have to see. Call me if you have any questions.